The Dow and the S&P had another record-setting day yesterday. Many world markets are also seeing green. Can the housing index and other U.S. economic figures keep Wall Street's rally going? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So stocks did close at all-time highs on Tuesday. It was largely driven by hedge fund manager David Tepper's comments that he's definitely bullish on stocks. So what do you make of his comments, Scott?
I think it was good to see. 2 years ago or so, when he came out and he was very bullish on the market, he instilled confidence in a lot of investors at home. And thank goodness, because we all know that there's been their share of fearmongers out there. People are saying equities are dead. People are saying, oh, this is the top, no, that's the top. Europe's going to implode. No, Mayans civilization's going to end. And here you have a guy who has made nice returns for his investors, who manages billions of dollars 2 years ago, saying, you know what, the stock market is the place to be with Bernanke as a put, whatever. Then lo and behold, yesterday, he comes out, and there was actually some talk out there from, I guess, some notorious bears that Tepper was going to be cautious, but he wasn't. He said, I still like the stock market. I still think we can go higher. And then obviously from our end of it, you have to navigate that. You have to navigate an approach and a process that's comfortable for you to be involved on a lot of different time frames. You could do it on multiple time frames. You could do it on one or two. Just have one of them and work on it so you could participate instead of being left on the side, all anxious that you're missing out and not knowing how to approach it.
Exactly. Yeah, a lot of people are upset if they've been on the sidelines during this move. So show us a visual of the levels you're watching.
Well, the level we were watching yesterday was 1636, which was the pivot high of the previous 4-day range. And if you look here at the chart, you will see, with the visual of the SPX on the chart, that this was where we broke out once again. Okay, here was the breakout above 1597 on the jobs-induced rally. That's what that was right there. So with that said, if you remember also in the course of the past week, you've had all the talk about, the Wall Street Journal article, that the Fed's going to be tapering down QE. But lo and behold, we never had a close below a prior day low. So the market was saying, okay, we're not done going up, it's fine. And then boom, here was Tepper, here is the pivot, closed strong, and now you have another pivot to watch, 1651. So either we're going to digest a little bit and then step higher, or maybe we push through and extend again. But overall, there's been a lot of participation in a lot of sectors. One sector goes, then one rests. Sometimes they all go together like yesterday. There's been a lot to like if you're looking at the price action versus trying to figure out reasons why not to.
Right, and speaking of a lot to like, we've talked a lot about the financials, which led the rally yesterday. Goldman Sachs was the biggest winner of the day. How much room do you think to the upside this group still has?
Well, some of the stocks are already at 2013 highs, and some are trying to play catch-up. So we try as traders figure out what could go next, what's leading, and where there's room. If you look here at the XLF, this chart broke out above another key level, broke out above 1932, closed pretty strong. But in this group, you had some stocks lagging. And to me, Goldman Sachs was not really lagging, but it was consolidating a big move that we saw from December all the way into the February highs. So here was your descending channel. So we talk about, setups for traders. So this is when it broke through this, didn't really have follow through, but held above it. And then yesterday, with Andrew here, I talked about if we can get through 151-ish, you could see a clean move that you could add to an additional swing trade or even just do it for a day trade. And there you go. So now here you have the old high of 159. So I would say, either it's going to, I think it's opening down a few pennies today. It's going to either trade right through yesterday's high for traders to use as an additional entry and then go up here, or it'll rest a day or two and then maybe go through this high. But overall, I think it's just a matter of time for this 159 to get taken out. So there's still, some room here before it contends with it.
And retail has been strong as well. The RTH finished the day up over 1% yesterday, saw all-time highs as well. And a lot of people will be watching names like Walmart within this sector.
Yes, this group also at 2013 highs. A lot of these sectors all look the same, but the question is, what could you play within the sectors for additional cash flow? So I think this week Walmart is front and center. And the question is, after having multiple moves, okay, which we've seen in this stock, if you remember a year ago or so, it was my retail stock of the year right here for a move to about 75, which had happened, and then it had to consolidate. We talked various times on this show, one time at around 72, another was to set up at 74, and then here you are again. Upper level, sideways, almost, flag. Some people would say that this is an enormous bull flag where here's your pole, here's your sideways flag to consolidate this move, and above this level here of 78, 86 or 79, maybe we get a breakout type trade, which is something that's going to be on my game plan today.
And over in industrials, the XLI managed to close at all-time highs. What are some of the names that you're watching within this sector?
This group I really haven't been focusing on, but seeing it break out and seeing the power here shows you strength. And if you look here at this, ETF, you will see, here is your last breakout above this 42. Continued higher, another little flag on the highs here. I can't say really off the bat that I've been, very active in this group because I've been trying to look at the financials, some leisure stocks, some casinos, some tech. So, just looking at this group, it's participating in something that someone can't obsess over.
Well, you haven't mentioned the ags, and they've actually been making a comeback. They've regained the support of all key moving averages last week. So how strong would you say this group looks?
Well, this group has been one of the laggards, and I guess I don't mention it because there's been so much relative strength across the board that every time I look to the ags for some kind of catch-up play, sometimes it works, sometimes it doesn't. And if you look here at the MU, you'll see that it is a laggard play. I just showed you the industrials that were through the roof at highs, and then look at the highs here of 2013 for the ags. So you don't see the ags at highs, you see them a lower high. So this is a laggard type trade. So sometimes I've talked about Mosaic playing some catch up, and look at that, every time it seems to get going, it sort of fails. That's what happened right here. So sometimes that's why people don't look at these ags. It's a little erratic. And then let's just see best in breed Monsanto. What has that been doing? You would think something could break out with some force, and even that's not. So I think that this group has been somewhat of an avoidance because there's been so much better action and cleaner breakout moves in other various sectors. Now,
would you say the same for the utilities, which showed strength during the recent pullback with the XLU holding the 50-day? Are there names within that sector that should be on our radar?
Well, this is interesting. Like, this group was considered the strongest group on the defensive area because, when it felt like this was more, QE induced, people were just looking for yield, they were looking for defense. This was on the move. And then if you look at the chart here, it's had a really nice pullback. So, if you didn't want to chase it at the 50-day, this is probably a spot to buy the dip. Why not? I think once the jobs number came out and we saw a little bit of growth, people said, what, look at the move we've seen in the utilities. Let's get away from something that's been deemed somewhat, defensive. And here was that trend that broke right there. Okay, so this was your, your way out. But overall, I think that at some point, this is going to regain its footing. And, it was as high as 41.44. So after a 5% pullback, we saw that in the Russell, we saw that in the Homebuilders, we saw that in the various groups that are now at highs. If you want to buy a dip, I would say, this isn't a momentum play. Buy the XLU versus the lows here of 39.46 and, just play it that way.
All right, well, coming up, we're going to go in the trenches with the Homebuilders ahead of the Housing Market Index today at 10 a.m. But first, a quick commercial break. We'll be right back.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms. I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a...
Well, with the housing at 10 a.m., we're turning the spotlight on the Homebuilders to see if there could be some nice setups there today. Let's start with Toll, which has been stair-stepping higher, is now approaching the key major resistance level of 37.08. So if it can break above that level, what would be the next one to watch?
This one's been playing a little catch-up, not really leading the group. We'll get to the leaders after this, but this one has room to the highs. It made a high before some of the other ones, and if you look here, you will see that the stock has broken above a few levels. You go to the chart of this particular stock, which is Toll Brothers, you would see that it just broke above 35. So at 35, here was that breakout above that downtrend, and then it closed in the high. So at this point, no clear setup, but it does have room to get back to the old highs of 38. And then if you want to draw actually a bigger channel here, chances are if we were to break above this channel at some point, you then could go a little bit to your longer term charts, go to your weekly chart, and see that, wow, not much to the left. So this will be a big area once it gets back to this 38-ish.
And Lennar briefly broke above the key resistance level of 43.90 yesterday. So an important level to see if it can get above and hold today.
Yes, this one definitely versus total is showing relative strength. It's already at this area, at this level. You look here, you'll see that it's starting to bust above. It's above all the key moving averages. So I would think that above, what is this, 44.12, it could continue. So with that said, there's the 8 and 21 day. So we'll see if some power comes.
And KBH consolidating at highs, getting ready for a breakout here.
Yeah. Anyway, usually in your homes you have like a fly that jumps around. We're laughing because there's this fly that just keeps coming in and I have no idea where it came from. But anyway, in the home builders, it's a great sector to have a little, insects. Hopefully they're not in your house. But you look right here, you'll take a look at this chart. KBH, it is tight. There is a setup, and let's see if it can break above with power. I think this is something that has a better setup for traders to watch, and if we can get above 24.82, we could see an extension, and then maybe the rest of the group will follow.
All right, time for some quick hits here. Let's talk Apple. Sending us mixed signals. Down day yesterday. Where is this one headed?
No insects here, but maybe a worm.
Oh boy.
With that said, I've been trying to stay with this trade. I've been trying to figure out what the composure of Apple is. Obviously it's had a huge decline from 700 all the way down. This was your 419 pivot. It broke below on earnings, even though it was somewhat of a soft guidance and report. It broke above, so I took this as a swing trade. Selling some into this prior resistance made sense. It started rolling over. You take a closer look here now, and I was hoping we'd get some kind of bull flag consolidation from a higher level, and you know what? It didn't break higher, it broke lower. So I got stopped out yesterday somewhere around 450, 452. Broke the 8-day. It's still above the 21-day. So I would say today, let's see if it could get back above 442. If it doesn't, this 50-day will be the last line of defense. If it doesn't hold the 50-day, then I do think you're going to hear a lot of noise that it's going to go back down and test this 385 here.
Well, we had a lot of noise yesterday about Tesla after a historic 3-day move. The stock had a huge reversal on volume. So does it look like it can go even lower?
We'll see. Usually a day like yesterday leads to more downside or at least a rest, and this stock's had a huge run, huge short squeeze. It's been the obsession of the media talking about it, and finally, yesterday it had a gap up. We talked about it in the morning call, potentially on how it could be a gap and trap type of scenario. Gapped up, failed, closed near the lows, gave you a lot of different entries. Look at the 5-minute chart. A lot of people asked me yesterday how I traded it, so I'll give you a quick little show here. Let me go to where it opened up. Let's see. You know what? We have the different time slots. Let me get rid of that so you could see it a little bit clearer. Here's the East Coast. Okay, there you go. So here is your gap up in it yesterday. Okay. With that said, huge gap up. A lot of people have been squeezed out. So I said, you know what? You have a gap up here. You could short it versus this, this pivot right here. That was 97. So somewhere within 93 to 95, that was your short. Futures went higher. It didn't. Showed you relative weakness. This was your break below. Then it hovered above 90 for a little bit and then gave you continuation to fill the gap. Came back up, couldn't get back above this line, and then PS, went lower. So it was a nice intraday daily setup. Now the question is, can it stay below 88, and the bottom third of this huge wide range bar for a day or so? If so, then maybe you could short more. If it doesn't do it today, through 81.15 for a move to the mid 70s, which would be a good spot to cover your trailing short if you still have it, or look to maybe even see if there's a viable setup.
And then over in retail, Lulu flagging above all key moving averages after last Thursday's breakout.
Yes, I think last week we talked 77 as a key point, and now it's holding higher, so maybe there's an add-on trade. You look at the chart here, you will see really nice move in Lulu. As far as that whole Tushy gate or whatever they had there, where you could see everyone's Tushy, all it led to was a viable scenario down there. But anyway, here you go. 81.77 is your next pivot to see if you can make some more cash flow.
And Visa flagging above its 8-day as well, looking pretty good.
Yeah, Visa, we've been talking about 180 for a while. I'm long it. I've tried for 2 days to see if it could extend through it. MasterCard gave you a better trade, but if this were to get above yesterday's high today, maybe finally you get something clean, and that price point for Visa would be 180, 149. And
Pepsi's waking up a little bit over the last 2 sessions. Could it be ready for another bigger move higher?
Yeah, well, this one has been consolidating. I'm laughing because I don't remember the last time I had a Pepsi. So they're a lot more than Pepsi. I like Diet Coke. Anyway, with that said, here is 83.65. Nice tight pattern. Last time it broke higher. People are still looking for the names, the high quality type companies. And this one is one of them. So right now, whenever you have a consolidation for 5 weeks or so, it becomes exciting. The level here is 83.65 to add. And if money keeps continuing to rotate, some could go there.
Yeah, and you mentioned Coke and a similar chart there as well, consolidating at highs.
Okay, let's take a look. Coca-Cola. Yes, it is. There you go. Here we go. Look at Coca-Cola. So I'll take my likes in the market in preferences, which I never do. No, I'm kidding. Anyway, look, this is very tight too. So I might as well put them both on your level 2s and see if they break out together. 42.71. Well, let's give them the Coke Pepsi challenge, the stock market way, and see which one breaks out and holds above highs first.
Yeah, interesting to see how that one pans out. And one last retail name for you, Sears, flagging on top of a wide range bar. Getting ready?
Yeah, this one I think has a very high short interest, so people are gravitating towards those type of stocks. Not like everyone shops in in Sears. I don't even remember that last time I heard someone say, "Oh, I'm going to go to Sears." I guess maybe if you need a washing machine. But with that said, 57.30, that's your price point. Perhaps it continues. I know Eddie Lambert is trying to be active here for some type of movement. He's one of those activist type guys. So above this price point, maybe you get another trade.
All right, so we do have producer price index at 8:30. We have housing market index at 10 o'clock. What are you focusing on heading into the session today?
Just going to see if today is one of those like digestion type days where we had a big move yesterday, indices digest, but when the indices digest, that's when you get to see where the relative strength weakness is for additional type moves, whether it's in the financials or the home builders based on the 10 o'clock number. We went over those levels, whether retail and Walmart and some of the other ones can give you some more opportunities. There's a lot of different types of opportunities, different types of trades, a lot to like if you're looking to like things versus just looking to be negative. So at this point, until we get a close below a prior day low, I would just stay the course, or until we get a big stretch above a prior high and then close above it for some type of topping tail. There's really, a lot of the same going on. And unfortunately, it's not sexy and fun and flamboyant. It's just the same, but sometimes the same could work.
All right. And with that said, happy trading, everyone. Have a great day.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.